Join me as I walk you through my entire stock portfolio, revealing the companies I'm invested in and why. And I'll also give you some actionable ideas and inspiration for your own portfolio as well. At the end of the video, I'll show you how much I own of each stock as well. And if you'd like a deep dive of some of these companies, feel free to check out my channel as well. So yeah, let's jump in and start with my smallest position currently. And that is Texas Roadhouse, a US-based restaurant chain that offers great steaks and southern hospitality in a lively and country-themed setting. And this was an investment I did once ChatGPT was launched and during the AI hype. And I was thinking, which stocks are kind of totally immune to AI? And then I came to the conclusion that restaurant stocks is a great bet. I think looking ahead in 10, 20 years, people will still eat food, regardless of what's happening with AI. And Texas Roadhouse is one of the best stocks in the world. They have amazing margins and a really happy customer base, and they're growing consistently each year. And my second stock is Uber, a company I believe most of you already know of, and it's a company that's revolutionizing how we move and eat. Uber's platform connects millions with riders and food delivery globally. Their expansion into freight and autonomous tech signals a dynamic future as well. And this stock is not only about revenue growth, at least in my point of view, it has to do with increased profitability. In the recent year or recent 2 years, Uber is finally positive on a free cash flow and EBITDA basis as well. So this is a bet that not only that Uber will grow, but that they'll also be able to carve out a healthy EBITDA margin in the future as well. The third stock that I own is called S&P Global, and you could say it's the backbone of the financial market. So S&P Global provides essential credit ratings, and they also maintain the iconic S&P 500 and the Dow Jones indices as well. They also provide crucial data analytics that drive investment decisions worldwide for institutional investors. Think hedge funds, pension funds, etc., etc. And this is the type of company that if the CEO came into my room right now and punched me in the face, I would still buy more shares. That's how good it is. It has amazing margins and it basically owns the market with 2 other companies, right? They have 30% global market share and it's essential. Many companies need their credit ratings to secure loans, and the S&P 500 index is a staple in the financial market. It's not going away anytime soon. And my fourth stock out of the total 13 is Chipotle Mexican Grill, and this was also an investment that I did at the same time as I invested in Texas Roadhouse. So Chipotle is a fast casual innovator that disrupted the scene with its focus on fresh, real ingredients and customizable burritos and bowls. And I think this is yet again a great play on the restaurant business. Chipotle is famous for having some of the best margins in the business, right? I think it's much more interesting that other fast food chains like McDonald's or restaurant brands that are growing at a much slower pace. So my fifth stock is called MSCI, and this is a financial company that perhaps many of you haven't heard of. It stands for Morgan Stanley Capital International. It was a part of Morgan Stanley that was divested in 2007. And MSCI is a key player in investment intelligence. They also have the MSCI indexes like the MSCI World, just like the S&P 500 or the Dow Jones. And today they currently maintain roughly 1.8 trillion US dollars within these indexes, which is a huge chunk of the global market. They also have ESG data that empower investors globally. So in essence, they provide the benchmarks and analytics for informed and responsible investing at the institutional level. And this is, of course, a very lucrative business. Their EBITDA margin is roughly 55 to 60%, which is absolutely crazy. Even most technology companies, right, can't beat those margins. Okay, so my sixth stock is called Take-Two Interactive. Many of you that are listening to this and that are gamers will know exactly which company this is. So this is the home to gaming powerhouses like Grand Theft Auto and NBA 2K and the Red Dead Redemption series as well. And Take-Two excels in immersive storytelling and realism. Their blockbuster franchises command massive audiences and deliver long-term value. And the reason why I'm not showing Take-Two's own website is the reason why most have invested in the company, right? It's investing in Rockstar Games, which is the developer of the Grand Theft Auto series. And the Grand Theft Auto series is, you could say, one of the largest, if not the largest gaming franchise ever created. It focuses on creating an expansive, massive open world sandbox game. It's an amazing immersive experience, and the next installment is set to launch in May of next year. Now, we will see if that launch actually happens or if it's delayed yet again. What I do have confidence in is the quality of Rockstar games and their development. And usually these games run for 10 plus years, right? So once the game is launched, then we can look forward to 10 plus years of great revenue growth and profitability coming out of the company as well. And my seventh stock, and this might make everyone interested in cars really happy, is called Ferrari, right? I think there's no doubt that everyone knows who Ferrari is as a company. Ferrari craft dream cars with legendary racing heritage. Their exclusivity and iconic design fuel unparalleled brand desirability, and that is also reflected in the margins. I mean, this is a company that sold roughly 14,000 cars, right, in 2024, while Volkswagen sold almost 10 million, right? And still, the company has a market cap that is 50% larger. That to me tells two things. First, that they're doing an amazing job selling cars. That's obvious, right? Also, that the stock market are giving them credit for what they're doing with a high multiple. The company is still, in my opinion, slightly undervalued, but it's important when you invest in stocks not only invest in the most undervalued companies, but in the companies where the market is giving credit for the work that they're doing, and that really is the case for Ferrari, looking back at their 5-year performance, for instance, for the stock. And my eighth stock is called On Running, and this Swiss sportswear brand is making waves with its innovative cloud tech cushioning for a unique running experience. You might have seen these shoes yourself if you walked around in the city, around the streets, and haven't seen people with shoes with small holes, right, on the soles at the sides, and this is that brand. And their blend of performance, design, and sustainability is challenging established brands like Adidas and Nike as well, right, taking massive market share. And my next stock is called MercadoLibre, and this is actually a play on emerging markets, more specifically in Latin America. You could say that MercadoLibre is a blend of Amazon and PayPal all in one, focused on the Latin American market. And just like Amazon, MercadoLibre connects buyers and sellers across 18 countries. They also have a growing fintech platform called Mercado Pago, which has focused on increasing the digitalization of banking services in Latin America. And I think this is an amazing investment playing the Latin American expansion, right? Or the growth in Latin America. And an example of the amazing track record of the company, right? We can see post IPO in 2007, the company has grown the stock by 30% per year on average. And that's something that still continues today. The stock is currently up almost 47% year to date. Now my 10th stock is called Universal Music Group, and it's the world's leading music company. UMG is home to countless iconic artists and a massive song catalog. They shape global music culture and are innovating in streaming and fan engagement. As of today, Universal Group owns over 30% of all global recorded music, which is a massive market share. And what's amazing about the music business model is that, for instance, they own the music rights for the Beatles. Now, the Beatles do not exist anymore and they're not making any music, but UMG still makes money from their songs. And that means that their profit margins will continue to expand in the future, right? Once a song is recorded, they can profit from that song for decades to come, which is an amazing business model. Moving along, and now we have reached the top 3 stocks in my portfolio, at least on a portfolio weight basis. And my next stock is called Hermès. And Hermès is a French luxury house that embodies timeless elegance and exceptional craftsmanship, from its coveted Birkin bags to exquisite silk scarves. Their heritage and meticulous quality define enduring luxury, and they have extreme pricing power. Even if you would walk into their store today, you wouldn't be able to buy most things in the store. And that's basically how their business model works. They have too much demand and they are constraining their supply. And that type of exclusivity and demand is really reflected in the profits. This is a company with 48% EBITDA margin, starting to grow towards 50%. And my second largest stock by portfolio weight is Microsoft, and this might not be a huge surprise. I expect that Microsoft is a huge position in many portfolios out there. And Microsoft, of course, is a global tech giant that powers our digital lives with, for instance, Windows, we have Office, and we have Azure with their cloud services, and gaming with Xbox as well. And to me, this is by far the best of the mega cap US-based stocks out there. It has extremely diversified revenues. And to be fair, I think this has been quite reflected in the stock, at least on a year-to-date basis. If you compare Microsoft to all of the other Mag 7 stocks right now, it's the one that's closest to an all-time high, and it really has a strong year-to-date performance as well. I think investors are giving credit to Microsoft for having these resilient, diversified revenues, right, and still growing at a high pace. It's amazing how this company is growing at above 10% per year and at this scale as well. And the largest stock that I own by far by portfolio weight is called Investor AB. Now, granted, I understand that most of you have no clue what Investor does or what type of company this is. And this is actually a Swedish-based investment company. I am based in Sweden myself. That's probably why I know about it, right? It's the largest investment company in the Nordics as well. And you could say that it's kind of like the Berkshire Hathaway of the Nordics, right? It has the same kind of investment philosophy as Warren Buffett, and it has shown really good results over the past few years in terms of shareholder returns. And the firm does this by strategically backing global leaders like ABB. They also own a roughly 10% stake in the Nasdaq company and the stock exchange, right? And the company is actually maintained and controlled by the Wallenberg family, and they are by far the richest family in Sweden and in the Nordics. You could, I guess, compare them to the Walmart family or the Rockefellers in the US. Anyway, they have a lot of influence in the Nordics and across the world as well. So now we're going through all the 13 stocks that I own in my stock portfolio as of today. And here you can see the 5-year performance of all of these stocks. Now, I haven't owned all of these stocks for 5 years at least. Some have been longer, some have been shorter. But here marked in green borders, you can see all of the stocks that I have owned and during that time frame beaten the S&P 500. And that's kind of the key message here, right? Investing does not have to be about finding the highest growing stocks in the market. It's about consistency. It's about avoiding the bad stocks and finding the great stocks that kind of beat the market over the long term. And here you can see a complete breakdown of the stock portfolio. And when allocating different stocks to my portfolio, I like to look at different type of weight targets. For instance, equal weight, which is 5 to 3%, that's the target chunk I would like to allocate my portfolio to an individual stock. Now, overweight means that I am really bullish for the company going forward. Underweight means that perhaps I'm losing my interest or that I'm building up a new position in the portfolio. And having said that, here are a few good tips. I would say focus on quality stocks. That really is the important message here. It's not about focusing on the most stocks, it's focusing on the best stocks that are consistent in their performance. I would also say understand what you own, right? There are a few sectors that I haven't invested in. These are just markets that I can't understand in the level that I need to invest in. And lastly, I would say don't over diversify. There is no point owning a stock that's below 2%, and usually that kind of dilutes the performance of the portfolio going forward. And here you can see the different sectors I'm invested in. So this also includes the index funds as well. The biggest chunk has to do with Nordics, that's a diversified index fund. But the key sectors are of course software technology, there's no surprise in that one. And we have a huge sector which is consumer retail and luxury goods. But in terms of some portfolio tips, I would say that focus on what you own here again, right? Don't try and go into sectors that you feel that you don't have an edge in. I would also say stay between 0 and 20%. Usually if you go above 20%, then the portfolio might be too dependent on the performance of that sector. I would say also try and rebalance and don't sell in uncertain times. With the tariff situation here in the US, I would not guess that the S&P 500 would be positive right now. In those uncertain times, perhaps rebalance into different sectors than just selling out entire positions. And here we can see a country split as well of my stocks. We can see that the US is dominating, no surprise there. It's obvious to me that the best and highest growing companies are in the US, right? Then we have Sweden, of course, as I'm based in Sweden. Some pro tips are try and keep a global approach. You never know which markets will outperform others. Also try to stay up to date, right? These type of tariff updates, for instance, or fluctuations in interest rates have a huge impact in stocks in different type of countries. Here again, I would say rebalance and don't sell. If the US is underperforming, try and rebalance into other markets like Europe or Asia in the time being. Right, so we reached the end of the video. Thank you so much for watching. If you found it informative, please feel free to like and subscribe. And if you'd like to see the in-depth analysis I have of some of these companies, you can go to my channel and you find the videos quite easily. So I'll see you in the next one.